matchmaker for 5 years now. I own a FranNet office. I am one of over 40 FranNet office owners. We have offices throughout the United States and Canada. We actually have opened a small number of offices in Europe. And our role as franchise consultants and franchise matchmakers is to provide education about the franchise industry. We screen franchise companies that we work with and work with our clients at no cost to them to determine if franchising is a good option for them to consider. And we help them create a business model to get an understanding of their priorities, their goals, their skills, their motivations to be a business owner. And then we start a process recommending franchises that could be a good fit for them.
Michael,
Yeah.
Some people may not, but explain what is a franchise first. Let's start there.
So a franchise in its very basic terms is a license, okay, to use the name, trademarks, business systems, and of an existing operating business in exchange for a franchise fee and a royalty payment. And there's a little bit more to the franchise, the franchise than that. Today, franchise companies that are offering franchises in the United States are regulated by the Federal Trade Commission since about 1979. And they're required to produce a franchise disclosure document, right, which has to follow a set of questions that the FTC has outlined, and so that consumers, people interested in being first-time business owners, can rely on the information provided in that document to make well-informed decisions about the franchise business.
And then, I know franchises have been around for decades or more, but I mean, it's in Europe, they go back even further.
Yeah, so here in the United States, they go back to at least back to the 19th century. For the first business credited with being a commercial franchise was Singer Sewing Company, if you recall that.
Yeah,
that was back in I don't know, the 1890s, I think. But franchising really took off after World War II, and in the 40s is when we see introduction of some brands that are still around today. Midas Muffler, for example. Of course, it's changed a lot since when it first got introduced. It was strictly mufflers. And today they offer a full suite of auto repair services, and The other, McDonald's actually didn't arrive on the scene as a franchise till the 50s. Started by, I think it was two brothers named McDonald. That's where the name comes from.
It was Kroc was her last name, I think. Wasn't it Ray Kroc? And
well, Ray Kroc was the person who bought really the third franchise, and he then, I think he acted as a master franchisee, and he was instrumental in their growth, and they've certainly, they're typically the name people think of when you talk about franchising.
right.
Right. So franchising has been around for a while. The government didn't really get involved with it, and as I said, until the 70s, and then in 1979, the FTC issued a franchise rule, or set of rules or procedures of what a franchise has to be. A master franchise is when somebody is given the rights to an entire a region to become a sub franchisor for all intensive purposes. So they actually will be the person that will develop and offer individual licenses and provide some measure of support to those licensees that work and own their own businesses under them. Not all franchisors are offering master franchises today. So it's common to see master franchises offered when a franchise business wants to expand outside of the United States. And you may be reading or hearing, about the Subway master franchise company in Russia, and folks aren't too pleased with what's going on there, but it's a very different business, and the Subway brand itself has more of a hands-off policy when it comes to what the master franchise company is doing. But there are over 400 units, Subway units in Russia right now.
Huh. All right.
Michael, I had a question. What are the different types of franchises, and what are some of the ones that you wouldn't normally think of that are franchises?
Oh, sure. Well, okay. There actually are over 3,600 different franchise businesses today in the United States, and there are somewhere around 90 or more industries. Okay. Food franchises make up somewhere around a quarter of those businesses, and they by far employ the most people. Okay, but that still leaves a pretty big number of industries. So there are franchises that are B2B, offering business services. Some of those might be home-based businesses. Others could be, providing physical services like cleaning and property management and things, or accounting and bookkeeping services. And you're not likely to see those as you drive down Main Street. And then there are companies that provide home services. And those have really been taking off over the past couple of years during COVID, because people have been spending so much more time in their homes, and many more people are today are working from home, and that coupled with that real estate is getting pretty pricey, and there aren't that many homes being put on the market, so people are trying to really make do with what they've got and improve it. They've got more spending power, even though they might not be happy with inflation. They're their investments have done well, and despite the somewhat recent turmoil in the markets. So they've got money to spend on making improvements to their property. So we're seeing a lot of that. Probably one of the surprising types of franchises that's really been taking off is junk removal businesses, and businesses that do it in a eco-friendly way.
Yeah.
Okay, they don't just take the junk and bring it to the landfill. They repurpose it. They either bring it to a showroom where they show used furniture and whatnot, or they donate it, or they recycle it. And in fact, one of those businesses started in Stamford, Connecticut, and the whole area now is sold out. But there are some other similar businesses that are coming online. There was a question I saw in the chat about Chick-fil-A. Yes, Chick-fil-A is interesting business. They do call themselves a franchise, or I've heard them refer to it as a franchise, but really they're an operator model. Okay, and as an individual, you can apply, and it's very, very difficult to get a Chick-fil-A store to operate. Chick-fil-A decides where they're going to go, Chick-fil-A continues to own the physical store or restaurant. Okay, so as an operator, you really don't have an asset, and so your cost to have the right to operate one of their stores is very low compared to most other franchises. And it's said that it's harder to get a Chick-fil-A franchise than it is to get in a Harvard. Okay, it just, and it has a little bit of a cult following, I think. But you really you're expected to work full-time in the restaurant as an operator. So you really don't have an opportunity to scale your business, and own and operate multiple businesses, which are very different from a franchise, where you can scale, and you do have an asset that will become valuable as it grows and earns money.
Michael, talk about some of the pluses of going with a franchise versus starting up on your own.
So the first thing that comes to mind is that a franchise is going to provide you with a proven business plan, a systematic way of going into business and staying in business. They provide you with training and support throughout your franchise ownership journey, not just when you first start out, but as you move along. And for franchises that are in sectors that require a degree of innovation, that are changing and evolving. That's very important. It allows you to stay on top of it and not get Amazoned out, if you let me use that term, and they able to stay on out in front. Other advantages is the I would say in the long run, short and long run, franchising will end up being less costly to start and own and run. Although there is a cost of entry and there's a royalty, okay, you're getting a lot of services. You're able to you're working with a brand family, okay? And you're learning not just from the franchisor, okay, the franchise business, okay, but you're learning from each other. And you're developing, relationships, okay, with other like-minded business owners, all working, for a common cause, which is the brand. As the brand itself, can be valuable, and that value extends to the individual business owners. Financing options are more. There are more financing options with franchising than if you were, as an individual, walk into your local bank and say, I need a business loan. Franchising is known. Many franchises, and most of the franchises that we work with, are on what's called the SBA franchise directory. I'll say that again, the SBA franchise directory. And that's important because it means that the SBA has received documents, from the franchise business, right? And they are determined, okay, after review by the SBA, to be eligible for SBA lending. Okay. Now that's not an automatic approval. Okay, as the individual prospective business owner, you need to put together a business plan. You also need to be a good credit risk yourself. So they're going to look at your own, your own credit as well. But it's a lot easier to get funding. There are also other ways of accessing funds that many people don't know about, and that includes using what's called a ROBS plan, or which is a rollover for business startups. Right. So what I find, myself included, a lot of us, have been very good at saving and investing in 401ks and IRAs and 403bs and other retirement investment accounts, and that's where we have most of our liquid wealth, if you will. And we don't want to be taking all of our retirement and using that to start a business. Okay, but you may be in a situation where you can invest a small part of that money in your business, and your business becomes an asset, okay, of your 401k. And the IRS allows you to do this. It has to be done properly. Okay, recommend by a company that does these as a business, and so that you remain in compliance. And because it's an investment, those funds remain tax deferred. They don't get taxed, and it's not set up as a loan. So as your business it makes money and becomes profitable, and you are able to put put money back into the 401k. It works to your advantage. You're able to put your pre-tax money to work, for you.
Michael, oftentimes banks look for industry experience in lending money to people starting businesses. Is that required to get a franchise?
No. In fact, the franchisor steps in really to fill that requirement, if you will. Okay. What they are going to look for, what the franchisor is going to look for, and the bank, is that you have some transferable business skills. Franchisors really, for the most part, okay, don't want people who have specific industry experience running a business, because there's great probability that they're going to think they have a better way and not follow the franchise system, right? And or they decide that I've done this before and I'm going to take some shortcuts, and very often those shortcuts don't work to the advantage of the business owner or the franchisor, and they can get themselves into trouble.
I know some franchisors have a requirement that if you're buying a franchise, you need to work in somebody else's store for a certain amount of time to see how it really runs on a day-to-day basis.
I've not, the franchises that I work with don't have that requirement. In fact, they would rather you have been a successful in a corporate career, okay, or as a prior business owner, but that you've developed some really good skills, that you're a solid communicator, that you've got experience, with customers, that you are, are somewhat business savvy. If you've had requirements, running a department or a division, and those are the kind of skills that franchisors are typically looking for. I would say an exception to that would be food franchises. I think if you're going to open a franchised restaurant or fast service restaurant, having some experience along the way, working in a franchise in a restaurant, not necessarily a franchise restaurant, but understanding all of the complexities of running a restaurant business. That's it. That is one business that is typically much harder than it would appear. Yeah.
Michael, there's a question in the chat from Britt. So Britt, I'm going to read your question, but let me know if I've explained it correctly. So Britt's question is, if you were a business working towards franchising, what do you feel is the best model to offer? You know, and she gave the
So-
example of
so-
B2C.
So you're saying if you're a business owner now of an independent business, okay, and you'd like to potentially franchise that business, offer franchises. First thing I would ask is, do you have multiple locations? Have you proven that your business model can be replicated? Okay, right? And then understand the costs and the changes that it will make to you and in your business, because now when you offer franchises, you've got to be able to support those franchises, right? And that's got to take priority. So can you put a manager in place and running your existing business now, and let them run it, or could you eventually turn those locations into franchises themselves and run it? What kinds of businesses could be franchised today and do well? Well, really, I'd say any kind of home services business, if you've got a proven marketing model that where your marketing message will resonate in a variety of regions, okay, and you can create a get a piece of that market share. That's really what's going to be important. I don't know if I answered that question thoroughly enough, but there are companies that can work with you if you're a business that wants to franchise. There are companies that will help you develop your business and put the right things in place. You've got to, as one of the early components, you need to put together our franchise disclosure document, and you'll need a franchise attorney to help you with that.
Michael, I always understood the franchising laws are different from state to state. So you need to put different disclosure documents together depending on which states you're.
They tend really not to differ all that much. And there are some states that have particular that might have a particular statute or law that might require a half a page addendum or to for that purpose. Franchisors, though, that are expanding nationally, they do their best to build the disclosure documents and agreements that are going to work in all cases. Yes, there are states, and Rhode Island is one of them, that has their own registration filing or registration and approval process. So the franchise disclosure document and agreement has to be submitted to the state of Rhode Island, and they are not able to offer franchises in Rhode Island until the state gives them the okay. And there are some industries that are more regulated than others, and not just toward franchising. senior care, for example, providing care is a heavily regulated in Rhode Island, and it's very difficult to get a license to open a senior care business, and that applies to franchises and as well as independent businesses. In Rhode Island being a very small state with a small population, not all franchises will choose to register, and absorb the expense. If there's only going to be room for one or two franchises for that brand in the state, they may not, they may not want to go there. I've seen that happen. Still plenty available, but know that not every franchise that works in other places in the country will work in Rhode Island.
Michael, what are some of the downsides of franchises, or things to consider?
Well, I think while at the same time as since franchising, has fully baked systems and ways of marketing in place, they on the other hand will have restrictions, on the products and services that you can offer. They'll have certain rules of the road that they put in to protect the brand and protect other franchise business owners. Some franchises will have protected territories, so they'll agree that not to put another franchise within a certain distance of where you're opening. Some depends on if the franchise is a brick and mortar. It's usually a radius around your location. If it's a service business, they're typically going to map out a set of zip codes that have a population size for the demographic that they're trying to reach, and whether it's how many school-age children are in your area, if it's some type of educational business, or there's a franchise that does swimming, teaches swimming to very young children, for example, it's a franchise where you don't need to own the pool. So it's interesting because they use unused and available pool space that's available in schools, hotels, gyms, other places like that.
And what are some of the costs you had mentioned? Are there some basic costs to consider?
Well, there always is, and you're really going to look at the full investment, required, the capital investment to start your franchise business, which you're going to make an investment, whether it's a franchise or an independent business.
Right.
And I think an advantage of franchising is that in advance, of what your investment is going to be, and it typically provided in a range, because not everything isn't the same, across the country. Real estate is maybe more plentiful in some parts of the country than it is in the Northeast. Um, so landlords in some areas may be more willing to um, participate, and help you with tenant improvements and getting the space ready. Okay. More so than others. So that's an example of where the build out expense, if it's a brick and mortar, is going to be a range. The franchisor will do their best to provide you with what that range is. Other expenses that you'll have, besides the franchise fee, which you pay to the franchisor, you may need vehicles. You may need other equipment. It may be you may need, I say vehicles. You may need, systems, computer equipment. You'll need furniture. You may need signage, right?
Right.
Right. You'll need insurance. Okay. Right. Okay. So you'll need a certain amount of working capital to put toward marketing. You may have pre-open marketing expenses. So all of this is broken down for you in the disclosure document, and you'll always find that in item 7. That's item 7 is always going to be a detailed breakdown of your expenses, and you'll see a range there.
Are those disclosure documents publicly available? So if someone was interested, do they have to go through a process to get that, or is that something they could get easily?
It's hard to get it on a public database or network. You will receive that, though, if from the franchisor. Okay, it usually in the beginning stages of your exploration or due diligence. They typically want to make sure that you're that you're a serious candidate, and then after maybe the second call, but early on, they will provide it, and they're required by law to provide the disclosure document to anybody, and you have to have had it for a period of time. I think it's a minimum of two weeks, but typically you'll have it for a lot longer than that, because it will take some time to go through it, and you want to make sure that you have the opportunity to ask questions about it. And the franchisor or representative will set aside time to walk through it with you.
Michael, I mean, most franchises I'm aware of pay a royalty on their gross sales.
Yes, it's most common is going to be a royalty percentage of gross sales. It's not a one size fits all. It will vary depending upon the business, the type of business, and it's something you do want to take a look at. And if the royalty for one business is significantly different from the royalty from another competing business, then it's something you want to be aware of, or find out what are you getting for that expense, and then there may be very good reasons. I would say I'm most often seeing royalty percentages around the range of 5 to 7% of gross sales. Sometimes it can be less, Sometimes it might be scaled, if it's a kind of business that generates large, you know, um, large revenues, into the seven figures. The franchise might scale that so that the royalty actually goes down, as you generate more revenue. That makes sense. Some franchises will not do percentages at all. We'll do flat fees, fixed fees. So what the dollar amount is. It might change. It might start off lower and then go up as you longer you're in the franchise, and then hold steady. It might be a fixed amount regardless of what your revenue is, and that can work well. But that's how royalties work, and it's really what keeps the franchisor going, and that's where they make their profit is from the royalties, is the share of the money that the franchisees earn, and that's where they get their return on investment.
And then do some franchisors charge a marketing fee?
Some franchisors will have an advertising or a marketing, component, where they will do the advertising and marketing for you, or some of it on behalf of you and your location, and there may be a point or two that you contribute to that ad fund or that marketing fund. Some franchises will even have call centers, so that the marketing generates interest, okay, and the customer or prospect can call a centralized number and reach a call center, and the call center will then set appointments, okay, for you and or your team. In some cases, they'll actually take a credit card payment from the customer. And that's a valuable service to have. I'm seeing that a lot more with home services businesses, and that's a big difference maker that an independent business owner really isn't going to have. It's going to cost them a lot more.
Yeah, I think that's really interesting, having worked with some small independent businesses, and is the person calling you on a Saturday or call center, right? You could give you could have a much better customer experience if you have that type of a call center service.
Right.
Yeah.
They're franchisors are also going to they'll typically provide you with your website. That website, if it's appropriate, will include e-commerce.
Yeah.
And they'll take, there may be, we've been seeing over the past couple of years, where during COVID, franchise businesses were very quick to pivot to digital, and businesses, including fitness businesses, okay. If you were at the support of a franchise and you were able to quickly, capture your customer base and pivot them to digital, video, live video or on-demand video, you're able to keep those customers engaged, and franchise stores did a very good job of doing that. Well, in some cases, if the climate allowed, they moved services outside. You know, as if you, if you walked around some cities, you would see their cycling, moved outside, or onto the sidewalk, similar to what restaurants did.
Michael, say I found a franchise and the cost up front are 250,000. How much of that can I finance generally?
Well, typically, if assuming it's on the SBA's franchise directory, and you
Mhm.
and you're a good credit individual. Typically, the SBA loan can cover 70 to 80% of your project cost. I've seen some instances, depending on the business, if there's a physical business site, tangible business assets. I've seen it go up as high as 90%. So your cash investment might be as low as 10%, but more typically it's in the 20 to 30% your cash investment. So you do need to have some capital to put into the business, and you do have to be aware it's not magic, in that there are few businesses where you can just turn the key and it just starts churning out money. You've got to work. You've got to work at it. And in that first year, you should not expect to take a lot of money out of your business. Some businesses will have a faster startup than others. Service businesses for sure. There are costs that you're going to have in the early going, and marketing being one of them. And so don't expect it to be taking a lot of money out of your business in those first formative months of starting your business.
And do the franchisors ever provide financing?
On occasion, okay, but more typically no. But I have seen some franchises that will provide financing, maybe for if there's an equipment package, or they may provide some financing of the franchise fee. I've seen a small number of instances where they will reduce the franchise fee extensively in exchange for a slightly higher royalty. And so it can happen, but more likely they're going to have submitted the required documents to the SBA and are available for SBA financing. Now, you may be in a situation, if you're well capitalized, you may be able to do a brokerage loan, which not everybody's in that situation, but if you can do a brokerage loan, you're able to get a much lower rate, and you're not needing to actually remove money from your accounts. So that's something that you can look at as well, if you're in a strong situation to be able to do that.
All right. Isabel, do you have any other questions?
I I did. It was about, you made a comment earlier that one of the benefits of a franchise is that they're easier to scale, or you have more opportunity to scale. Could you talk a little bit about that?
Yeah, well, look, you have a couple ways to do it. If you are you're interested in scaling your business, either by opening up additional brick and mortar establishments, or expanding your territory. Maybe it's an emerging brand, and you really you like the brand, and you want to own the whole region. You want to own the whole state. Let's say the franchise may allow you to do that by licensing the additional territory, or licensing, for an additional location, which they'll then carve out, because you're not going to know exactly where it's going to go. Okay, and you'll pay a franchise fee. Typically, that franchise fee for the second or third location is going to be discounted, going to be lower. Okay, and you will sign a development agreement, so that you're not required to develop that additional location, okay, until further down the road. They may give you 2 years, to develop that location, sometimes longer. And so that's a way for you to have a plan to scale, and not be concerned that somebody else is going to buy that neighboring territory and block you out. So you can do that.
Yeah.
It's also possible, and we're seeing it start to happen now, where there's been some consolidation among brands. It happens most often with home services brands, and so there'll be a family of brands, right, that provide home services, and they will both work together, and share leads, for example, and there's potential where you could have a customer base. Let's say you own a kitchen renovating franchise, and you have a customer base where you've done work for customers. They've been very happy with it, and now you want to offer some other home services. Maybe you want to you see a need to look at the garage and offer a franchise that can improve the garage space, and put in storage and new flooring and all that kind of thing. Or maybe it's a bath franchise. So you can stack those different franchises within the same territory, and you have a direct way of being able to share share customers, and maybe even share staff.
We're getting toward 11 o'clock. I just wanted to see if any of the audience has any questions they'd like to ask before we wrap it up. Michael, if people want to get hold of you, how do they get hold of you?
They can by email. In fact, I'll put it in the chat.
Okay.
By email, mrosen@frannet.com. Right? Phone number 860-431-0107. Website, franet.com/m rosen. You'll find a lot of educational resources available there. Okay. Right. If reach out to me if you're interested in talking one-on-one. If you'd like to complete a entrepreneur readiness profile, that'll take you about 30 minutes. We can do that. That would be the first step really to start to put together your business model. If you reach out to me, I'll also send you a brochure that we put together called Roadmap to Success, and it provides an outline of the due diligence steps that you should do when you're evaluating a franchise. And I'd be happy to provide that to anybody if they reach out to me.
All right.